special guests this morning. I've got Jim Mitzel and Chris Barnes with me, and I'll let them introduce themselves in just 2 seconds with Primary Residential Mortgage. And those of you that have been around a while know that they are our lender partners and also the sponsors of this year's Easter egg hunt. So, gentlemen, why don't you introduce yourselves real quick?
Go ahead, Chris.
Go
ahead.
Don't be shy.
All right. No, we're just very polite. So, Chris Barnes with Primary Residential Mortgage. Been in the business for about 20 years and just always happy to work with Heather and super excited about this weekend and the Easter egg hunt, which is always a blast, super fun event, and just happy to be here.
Well, welcome.
Yeah, and I'm Jim Mitzel, also with Primary Residential Mortgage. Been in the mortgage real estate business for about 20 years. Just absolutely enjoy partnering with Heather and your team, and just the opportunity you give us to come and participate in events and do super cool stuff like this. And so we're just excited to be a part of it, and appreciate you again for inviting us on.
No, I appreciate you guys, and I think today is perfect because anybody that follows me on my social media, which if you're on here, you do, you know that I'm tired of the noise. I'm tired of everyone saying, oh, you can't get a home, or you can't get this, or the rates are so high. And it's just such a negative vibe out there. And in all honesty, that's not necessarily the truth. And there's a lot of circumstances that from a finance side, from a lending side, that really are not all doom and gloom. And I just wanted to have you guys on because I think you're kind of the knowledge experts when it comes to the lending side. And I always claim that I stay in my lane. I know real estate. My lender partners know lending. So I wanted to kind of just get your input and have you kind of share with everybody what's going on. And we've got some slides that we're going to go over. But kind of in a nutshell, I mean, what are you guys hearing and what can you do to calm people down?
I'll let you go first, Jim.
Yeah, so I think it's important right now to keep some perspective about really what's going on in the market, and I think that's just uber important. And I think so many times people get caught up in, Heather, to use your word, the noise, and obviously sometimes that noise turns to negativity. And I think that's what works well in the news and works well for headlines and news articles, Facebook ads, etc., stuff like that. But I think maybe a bigger picture thing, and we can get into some of the specifics of what's going on, good, bad, and different. But I think the most important thing is real estate is such a personal choice. And what I mean by that is buying a house, and many times is a personal choice you're making for you and your family. And that it does not need to be dictated by markets. It does not need to be dictated by interest rates. There are times in your life when buying a house is the worst possible thing you can do because you're at that point in your life. And it doesn't matter if the market is easy, good, bad, and different. That's not the best time for you to buy a house. And there's other times where your life is set up because of the personal financial choices and things you have going on in your personal life. It is the best time to buy a house. And you take, for example, just take our last 3 years we've been in. Let's go back to the negativity and noise. We've had people telling you that the market's at its height for 3 years. So if you'd have listened to that 3 years ago, you'd have missed out on 3 years of appreciation, especially if for you personally, you were in a good position to buy a home or the right time for you to buy a home 3 years ago. So I think that's just really the, Heather, just to stay away from the noise is just know that it's a personal choice. And you have to look at what you're doing financially, individually, and what you need as a family, and then reach out to people like yourself and us and other advisors just to find the best time and a specific opportunity for yourself, and kind of ignore some of the things that you hear and some of the negativity about what you should or should not be doing.
Yeah, I mean, that's a great point because, we all go through phases in life. I mean, to kind of use the term seasonal, like good seasons, bad seasons. And there's, real estate kind of intersects with some of those seasons based upon what the needs are. And I mean, I remember when I was a kid, hearing my parents complain about paying, I think it was like 16% interest rate because my dad got relocated to another city and we had to move. Well, you can't avoid that. That's something that happens and you're going to have to just kind of work within the parameters. eventually I'm sure they refinanced when rates went down, et cetera, but there was still a need and there was a solution for that need. So to kind of go to your point, Jim, I mean, it's not, there are still people buying houses, there are still people selling houses, and there's still lending taking place.
Well, and I think, again, what we can get into all the specifics, and there is a lot to talk about as far as, what are interest rates doing, what the Fed is doing right now, what is their plan for the future. And there's a lot of very economic type things we need to look at, some micro and some macroeconomic things. But the reality is real estate's a personal choice, and it's you have to look at that. And I think in that aspect, I guess the message that I want to get out is, if it's the right time for you and your family to make a move, then you find the right advisors and you move forward, because your people will take care of you, and don't let outside noise scare you away from that.
Well said. Well said.
Yeah, and kind of to piggyback off of that is the fact that saying that this is the right time for the individual. People are like, oh, did I miss the boat as far as, lowest interest rates, buying that property before the appreciation happened. Well, what's the alternative? If it's the right time for you and you wait, it's probably just going to get, the appreciation is going to continue to happen. Maybe not at the record rate it's going right now, but that's going to happen for the near foreseeable future. Rates are probably going to trend upwards. There's something maybe further out that we'll see them come back down. But the difference is, what if you wait now? Then you're just going to, a year from now, find yourself in a position where the homes have gone up a little bit more. So if it's the right time for you, it's the right time to, go ahead and make a move.
Yeah, I kind of chuckle when I hear people tell me they're going to wait until the houses aren't overpriced any longer. I'm like, we've never seen a decline in pricing in Texas. Even back in 2008, they held steady, but they did not decline. And so, in fact, even then, things were still trending upwards. So that's where, I think the noise and the media, I mean, we all know, I think we've seen over the last several years that the media has a tendency to do their spin on everything. They've got to make, sell ads. They've got to have you, watch. And so they're doing things it's almost like clickbait, but audio wise. Like, so you're trying to, hear these things, and then people believe what they hear and they don't look at the facts. And that's where you guys are. I want you guys to share the facts. I know we've got some slides to share. Jim, Chris, is there one that you want me to pull up first that we can kind of talk about?
You pull up whatever you have, and Chris and I will address them.
I'm going to toggle us off and on the screen just so we can see the slides a little bit better. So let's start with this one, and I'm going to hide myself because you guys are the.
She go away. You got it, Chris?
Yeah, I'm having a hard time seeing it.
Right.
Out and the data is something. Yeah. Oh, hold on. We can only hear each other when we're on the screen. So let me pull Chris on. Oh, I think Chris might be having a tech issue. Jim, you can hear me okay?
I got you now. But yeah, once that slide came up, I couldn't hear anything.
Okay. Yeah. So with this slide, I think what really speaks to me, and I think I like sharing with people, is you hear the the payments are going up and the rates are going up and this and this. Well, your income's also going up. And so in most situations. And so with that being said, if you take that and you take the appreciation of the house, it really isn't a stretch in a lot of situations. I had a conversation with a lady this week about that. We were looking, she's like, oh gosh, where would we go and this and that? And I'm like, well, hold on, let's step back a second. And we talked about this exact thing in their situation, and the appreciation value of their house had increased drastically, which then gave them more buying power for the next house. Rates weren't that much different than their current mortgage rate because they bought a few years ago and they hadn't refinanced. So the rates were pretty comparable, and they've increased their income as a household. So it's kind of a wash in a lot of situations.
Well, and not to get too technical in mortgage jargon, but basically how you decide affordability, to use that term. Does someone qualify for a certain home? We use something called debt to income ratio. And where you look at these numbers and you go, wow, this went up how much X percent? Well, those numbers don't equate equally, because what happens is if the payment went up $100, well, in percentile, that is a very small part of what we call the debt to income ratio. So it's not like that most people who are afford a house or get pre-qualified, they're on that ledge where if the interest rate goes up a little bit and the payment goes up, now the whole thing is just blown and they don't have an opportunity because it just isn't dollar for dollar. So that's I think something to keep in perspective when you start seeing some of these percentages, and it looks like, wow, that's a big percentage to go up, which it is when you just look at payment to payment. But in reality, when you equal that against income, it's not dollar for dollar, and certainly not in what we consider our debt to income ratios.
Yeah, and I think that's really important to look at the big picture when we're in these situations. Let's see here. Let's get your other slide up, because I think this one was kind of interesting as well. And we have to keep the slides up because if we take us down and the slides up, nobody can hear us. So this is very pretty, guys. This is very Christmassy to me. What's this?
Somebody jumped off a cliff. This was a cliff.
I know.
All right.
Yeah. So, so this is a really good idea of what interest rates have done. So if you look on the far left, that's the beginning. I believe, I don't know the time frame on this, but
it's a year.
1 year.
One year.
Okay. So you see, that's kind of what was happened. And you get into technicals and all that, but just to know that if you see something that sharp of a decline or increase, if it would go the other way, that's a huge move and we've lost, at this point, I believe we've lost over 700 and some basis points since January of this year in the mortgage market and in the bond. And that's a huge, it's really unprecedented in modern mortgage history. So
yeah. So for people that aren't aware, that this is the graph of mortgage-backed securities, and it's a 3% or 3.5% coupon, I believe, on this one, but it's actually showing, and it's an inverse relationship to rates, not direct, but it moves in the opposite direction. So as you see this going down, rates are going up. So you can tell that in this if you took this chart and broke it down into 12 equal segments, you can see that over the last 3 or 4, which would equate to months, there's been a very big turn. So
why are the rates going up?
Number one reason, inflation is really the ultimate, you want to call it the enemy of long-term interest rates. Because if you think about it, if I lend someone money today and they're paying a 3% interest rate, and then inflation happens and it goes up, and now they can only buy, they can buy less for how much that money's worth, then as a person lending out money, they need to increase the rates so that they can make more money back at the end, right? So that's kind of the main driver of it, but there's some other factors as well, and I'm sure Jim can chime in.
Yeah, and to get correct, that's that the Fed uses their interest rates to try to fight inflation, and so that is some of the talk of how many interest rate hikes they're going to have this year, and then the depth of those interest rate hikes. But really, the last big fall off the cliff that we've seen was the Fed has used the buying of mortgage-backed securities for years to help keep what I consider rates artificially low. And now they've pulled back. They've stopped the buying of it. But this latest news is the fact that they're going to start clearing them off their balance sheets. And that that with inflation and everything else is kind of spooked the markets a little bit. And you saw that this week when one of the Fed chairs talked about how aggressive they may get with unloading some of this balance sheet of these mortgage-backed securities that they've been purchasing for a while now.
Yeah, and one quick point. One thing that's interesting, and I think it's almost like a counterintuitive thing, is that the Fed raising rates could ultimately lead to mortgage rates coming down. So because they're trying to fight the inflation, if they can get the inflation under control, that could potentially help mortgage rates level out or even come back down a little bit.
So let's talk about that. So I mentioned earlier, my parents' rate, which was ridiculous back in I say ridiculous, it was what it was back in the 80s. What causes rates to go so high in those situations?
Well, I mean, I guess it takes, so obviously, rates all have a starting point. So where you would say this is a really large increase we've had in rates, and to me, a 5% interest rate doesn't seem, I've been doing this a while, it doesn't seem like a very high interest rate. Mm-hmm. But in retrospect to 2.625, it is a big move up. And so, some of that has to do with starting points, and then what happens. To Chris's point too, there's a lot of economic indicators right now that are strongly pointing towards a recession coming soon. And generally in recessions, interest rates actually come down. And honestly, housing always does really well in recessions. Other than 08, 09, and the reason is we caused that, real estate and mortgage caused that recession. But every other recession, housing has done really well and interest rates have come down. So, what makes them go up is like what Chris said, they'll have these interest rate hikes. These rates will continue to go up until something happens to stop. And then at that point, we'll have a new starting point. And then rates will gradually go back down, and then we'll start back from there and go up. So again, I don't think you'll see in this market double-digit interest rates because we had such a low starting point. I don't think that would be something very dramatic for that to have to get back to that point.
Well, it's funny. I remember Chris and I have been working together for a while. I remember we had a client back, I don't know, a couple years ago, and he was so excited because he got a 3%, like a 3.75, and that was like huge. And then this year, people are like, oh my God, 3.75, the sky is falling. I'm like, it's all relative, relative. And so kind of goes back to, pain points and needs, it is what it is. You're going to have to move when you need to move, when it's right, and your family has a need to move. I want to ask you guys something, and I'm seeing this on my listings and my buyers. Chris and I had a buyer, the last couple we've had, they've all been meeting appraised value, which we haven't seen that for a while there. Is that because there's more comps? Like, what's your analogy with that?
Yeah, I mean, obviously home values, the problem you got is home values for appraisals lag, right? So you sell a house for whatever number in a certain neighborhood, it's the first one that sold like that. There are no comps to support it because it's just that, especially when you've seen huge double-digit appreciation increases like we have. So then at some point though, there's the comps that start to back that up, and it lags. And I do think this year we will see appreciation, but not at the levels we did the prior 2.5, 3 years. So I think that even though houses are selling for more, they have a different starting point, right? Now we've had 3 years of appreciation at a high level. So going ahead and having a house that appreciates or a house that's going to sell for more, it's a better starting point, and the appraisals have caught up some.
It's kind of funny because going on listing appointments, people's expectation, I'm hearing it more and more, is okay, I always show a scatter graph. So market value is here, your price per square footage is at the bottom, and where those two intersect is market value. And so, I show them that. I'm like, okay, so here's where, the market says what your house is worth. And they're like, well, I feel like my house should be up here. And I'm like, well, there's a potential that, if we priced at market value, that it could go up there. But I think the could go up there is the exception. Again, going back to everything that, and I love my fellow realtors, but we need to stop posting all this crazy stuff because it's creating the noise of the, multiple offers, 100,000 overload, blah, 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 blah. That is now the new expectation. And when it doesn't happen, people are getting frustrated. So it kind of goes back to educating everybody, showing them the data, and then helping them make educated decisions accordingly.
Right. And it's fluid, it's dynamic. I mean, it's moving all the time. So that target is, what you see if new comps come in, today in the area, your price will change. So, it all feeds off itself.
Yeah, it's just kind of interesting to kind of hear and see it on a daily basis, because it's something that is just we're constantly having to educate. And sometimes it's interesting because we're educating people with information after they maybe have received bad information from somebody else. So it's kind of like, okay, well, I would hate being in their shoes, because you don't know who to listen to sometimes. So.
Well, Heather, I think to your point earlier about noise, I think that's one of the problems we have is people turn on CNBC, which is on behind me right now, and you get someone who's a national person talking about real estate. They don't know what's going on in this particular market. This particular market's completely different than what's going on in Kansas right now, or what's going on. It's just completely different. And so,
yeah, I mean, even in DFW, I mean, Canada is different than Frisco, which is different than Highland Park, which is different than, Fort Worth. And you have to look at the numbers in your little bubble, because if you don't look at the numbers in your bubble and you're looking at numbers across the Metroplex, they're wrong. And that's where, again, it kind of comes back to people believe what they hear, and sometimes there's a lot of education that has to take place.
Right. We don't deal with HGTV, right? We're not selling those type of houses and those fantasy things that happen there. That's not what's happening. So again, go back to a trusted advisor in your area that and talk to them. I mean, that's what's important, and that's where you get the real information. And again, I do think we have to do a better job as local people getting our message out and making sure people know what is going on, and that's our job.
Yeah, we talked a little bit about this slide, and I want to pull this one up. Bid over asking price. I know it's kind of hard to read on here. Yeah. And this was the slide you sent me, Jim. So I'll let you kind of speak to it.
Yeah, and I'll be honest with you, I'm old, my eyes, I can't see the exact numbers on it, but I know the concept of the slide very easily. And what it is what we just talked about previously as far as appreciation goes, and having appreciation and saying, okay, I'm going to pay this much for a house that's listed at this, right? So the house has been listed at this. It was sold 34 years ago for this. I'm going to bid over what the asking price is, or even what the appraisal value is going to be, right? What the actual market value of the home is. And is there benefit in doing that? And that's a question we get a lot when appraisal comes in short, or somebody says, gosh, I know I really want this house. We think the market value is here, but we're going to have to go significantly above that to make it happen. Then is that a wise financial decision? So this is one of the tools we use to look up. It goes over, average annualized appreciation numbers, what we've seen, what we think is going to happen, because the market probably will not appreciate the next few years the way it has the last couple. And I still see appreciation, but it will not. So if I do that and go over that price, was that a wise decision? And this helps people kind of put a financial idea, a financial, data behind it, and making that decision to see if it might be something that's beneficial to them. Because again, if you bid over ask, if you went over an asking price or even an appraisal price 3 years ago on a home, today you're sitting probably in a really good position. And having this type of tool to be able to look at that and say, here's where we think things are going to go, can be helpful when you're trying to make that decision for your family and make that decision for your financial future. So it's just again, just something to look at, knowing that. So for so long, we talk about bad information. We've been told you never pay more than the asking price for a house, and that's just, the data and the actual financial does not support that.
Yeah, and that's something I think that's kind of interesting to me is it's the messaging changes based upon the current market. And so, like you said, 3 years ago, 5 years ago, one methodology was taking place based upon inventory and things of that nature. Now the messaging is a little bit different based upon what's currently happening. And, you know, I always kind of, I've always said this. I say it more. I catch myself saying it more nowadays. Like a house's value is based on what a buyer is willing to pay for it and what a lender's willing to appraise it for. And now that we're seeing the appraisals kind of catch up with that value that the buyer's willing to pay in certain areas, I'm going to say, you know, I'm Frisco, I'm still seeing the pricing and the offers are so much higher than anywhere else that I've sold in DFW. And there's different reasons for that. But, you know, that buyer likes that house and is willing to pay what they're comfortable paying for that house. That's the new market value, because now that house then becomes a comp, which pulls everybody else's pricing up. So.
Yep. Yeah. I mean, and again, when there's a financial aspect to it, right? Like you look at it and say, if the home is going to appreciate at this level and I'm putting this in and this is when I'm going to buy a house, it does not, you can't go off the idea that that's a bad financial decision. So it's not. So, you know, again, having the data to back it up helps.
Yeah, for sure. And that's where, you know, just kind of talking to people and helping them understand it. I mean, I had a guy I was talking to at an open house a couple months ago, and he's like, these prices are ridiculous. I'm going to wait. And I'm like, well, you may not want to wait because they're going to be maybe a little higher even, you know, next go around, because now this house and this neighborhood's going to pull everybody else's values up. And, you know, the old saying, you know, now that I've been in Texas for longer than I was in California, I catch myself saying these little Texanisms, and it's like, you know, you can lead a horse to water, but you can't make it drink. I can give you the data. That doesn't mean you're going to listen to it or believe it. So, you know, that's okay.
Ahead of that person that said that, right? I'm not paying these. People said that 3 years ago, and how's that working out for them right now? It's not.
Exactly.
You didn't miss the boat. The boat's not even the water anymore. It's gone.
No, yeah, it's now a plane.
So yeah. So you again, you just have to. That's why it goes back to, it's a personal. If the time right for you to buy a house is now, that's the right time for you to buy a house.
Exactly. I you know, and we're here to give them all the information and to help, and you know, we can negotiate the deal and get the deals accepted. I'm pretty good at getting my clients' offers accepted. You guys are great at helping with the financing side of it. And I think that's important too. I mean, if you've got an agent who's not aggressive and doesn't work with the lender aggressively, I mean, Chris and I are usually tag teaming people when we're writing offers. I'm presenting the offer. He's calling and making sure that they understand that the financing is solid so that our clients are better positioned for their offers to be accepted. In this market, we did that even before the market was this way. I mean,
Right.
that's something that we're part of. Our objective is giving the highest level of service we can. And so that just comes naturally to both of us. So it's not anything new. But in this market, it's even more important.
Yeah.
So I know I've got you guys for, we've taken a lot of your time, and I really appreciate it. I know it's busy. I know you've got a lot going on a Friday, trying to wrap up the week before you head out to the Easter egg hunt this weekend.
Absolutely.
Any final tips, tricks, or wisdom from both of you? I'll give you each a minute or so to chat.
I would just say, you know, that we've already many times, it's important that you are working with someone that you trust, someone, you know, that's going to have your best interest in mind, take into account everything particular about your situation, not just a general overview of kind of what it is for everyone, but what it means for you to do the best thing for your family. And that is kind of what we focus on, is to, you know, take each individual and treat them by the way, you know, talk to them, find out what their goals are, to help them not only get into homes, but, you know, hopefully create future wealth for their family. We like to call it generational wealth, by getting into a home, you know, taking advantage of the appreciation, just different things like that. So, you know, to work with somebody local, to team up, make sure they have a good communication set with all the parties involved. Those are the big things.
Yeah, and I just want to say thanks again, Heather, for having us on. We appreciate you, and appreciate you doing this. But yeah, I mean, again, I'm just going to reiterate how I started and kind of what piggyback off Chris. I think you have to sometimes shut out the global, the national, the just the stuff that you hear, and know that what's going on. We, here on people that are listening to this, if you're in Texas, you're in a state that has a growth rate and population influx that is not going to go down for a while. We're you look at any of the national studies on where the biggest growth areas, and they're all, not all, a lot of them are in Texas. And we have a lot of industry coming here. We have a lot of growth. We have a lot of, pro-business type atmosphere here. So we're going to have growth, and it's going to be continued growth throughout this area. So the reality of that is the opportunity for your family to get in individually and start that path down generational wealth. Because again, it's, the one thing we do know, real estate goes up. It doesn't go up in every cycle, but I promise you buy real estate now, years from now, that real estate be worth more than it was then. And that just is tried and true. And it's been that way. So, again, work with somebody local, work with someone who knows the market, and most of all, make sure you're making the best decision for you and your family, and, and join the ranks of home ownership.
Well, thank you. I mean, great advice. I appreciate you guys. And I mean, we meet, I don't know, a couple times a year and just like chat about all the stuff and all the numbers and the market. And it's really interesting to me to kind of dive into that with each of you. And I appreciate you guys. And my clients love you, and we're just excited for the next year. I mean, we've had 3 great years, working together, and I think we've got many more ahead of us. So thanks so much. I think right above Jim's head, you see Lending with Passion, and that really is how they live their life, and it's their company's objective, and it's just, they all really do speak loudly to that. So thank you so much. Have a great weekend. I will see you tomorrow.
Yep.
All right.
See you tomorrow.
Looking forward to tomorrow.
Yep.
All right. Take care, everybody. Have a good one.
All right.
Bye.